Today, Bitcoin slides below $90,000 for the first time since November. Illinois Senator Dick Durbin introduces a bill to place tighter controls on crypto ATMs. And Vivek Raman of Etherealize discusses today's broad crypto pullback. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto markets in the red this morning as investors struggle to find fresh near-term catalysts. Trade tensions still linger as President Trump signals tariffs on Canada and Mexico will go forward. The U.S. economy is also top of mind after new data this morning showed a dip in consumer confidence in February. As of noon Eastern, Bitcoin fell nearly 7.5% and dropped below the $90,000 mark for the first time since November. At one point, Bitcoin sank as low as $85,000. Ether also sliding this morning, down 9%. It's also down around 27% so far this year, and XRP fell around 9% as well. Okay, let's talk about the top stories. Market maker Citadel Securities is reportedly considering providing liquidity for cryptocurrencies. According to Bloomberg, which cites people familiar with the matter, Citadel wants to work with various exchanges, including Coinbase, Binance, and Crypto.com. The firm reportedly plans to launch market-making teams outside the U.S. first, followed by a U.S. launch depending on how regulation in the space evolves. We reached out to Citadel Securities but haven't heard back yet. Next, Senator Dick Durbin just introduced a bill aimed at preventing scams tied to crypto ATMs. The Illinois Democrats' Crypto ATM Fraud Prevention Act would require operators to warn customers about scams at the machines. It also sets restrictions on how much money new customers can deposit, $2,000 per day and a max of $10,000 total to limit potential losses. For more on crypto ATMs and how some are used by illicit actors, you can check out this explainer from CNBC Crypto World. All right, let's get back to crypto markets for our main story. I spoke with Vivek Raman of Etherealize for his take on the driving factors for the sell-off and what could turn things around. Vivek, thank you so much for joining us on Crypto World today. A lot of interesting action in the market right now. Still in this very bullish environment, still very excited about all of the promise of the new administration in the U.S. But we are seeing, a pretty big sell-off today. What's driving things?
So first off, thanks for having me, Tanea. I think that we have to separate short-term price action from the biggest secular driver we've ever seen in the crypto ecosystem. Short-term, we're just in a bit of a risk-off sentiment. Crypto rallied a lot going into the election. It rallied a lot going into the inauguration. We got some incredible catalysts that are going to play out over the next year to multiple years. But in the short term, we are in a higher rate environment. A lot of the equities that are high growth equities outside of crypto are also just resetting a little bit lower. And as we combat inflation and sort of have tariffs and an overhang, I think we're going to see a little bit of risk off in the short term. But what it does provide is a really, really interesting opportunity to get back into the crypto ecosystem on the ground floor and pick the winners from the losers and really set up for a secular bull market.
And kind of competing narratives here. It feels like so much of this drop that we're seeing today and even yesterday is kind of an extension of some of the stuff we saw last week. So that includes meme coins and in particular Libra at the beginning of the week. And then we had, the biggest hack ever in crypto to end the week. I'm hearing a lot about both of those things, but I do feel like it is more of the spillover from the stocks. Would you agree or disagree with that?
I would agree. I think that it is a spillover from the stocks. I think that crypto is a nascent industry that finally has an opportunity to grow up. It's finally going to become institutional. It's finally going to be adopted, and it's already being adopted by governments, by institutions, by Wall Street. That's a secular trend. In the short term, there's a lot of noise, and I think that there's very many different use cases for different chains. I think Bitcoin and Ethereum are the cream of the crop. And a broader washout provides an opportunity to get into the highest quality crypto assets and set up for this next secular wave of adoption.
Are ETFs, and by extension institutions, driving some of the losses that we're seeing, or is it the other way around, the ETFs falling because of larger sell-offs?
I think it's more of a following thing. I think I attribute a lot of the short term to macro, which will ultimately reverse. I think at some point rates will come down. At some point we'll curb inflation, and we're setting up for a golden decade through this next administration. That being said, ETFs are a double-edged sword. Inflows are sort of reflexive, so are outflows. But the important thing that happens structurally is Bitcoin and Ethereum have institutional ETFs, and that opens up the buyer base to the entire world of institutions. We've seen a lot of the recent filings that now foreign governments own Bitcoin ETFs. We've seen like the state of Michigan owns the Ethereum ETF. That is real adoption. Like that is real staying power. That's not short-term capital. That's a secular change. We're just at the beginning of it, and the macro volatility is great, but to have real upside for new asset classes, we have to ride a little bit of short-term fall.
Yeah, we're also sort of absent a catalyst right now, right? For the last 3 months, investors have been so enthusiastic about pricing in the new pro-crypto administration. So we got through the election rally, the inauguration rally, which got us a new all-time high in Bitcoin. And then we got the executive order, which I think was relatively positive. I know the language around the strategic Bitcoin reserve was maybe not as strong as many people wanted, but with that behind us, nevertheless, there isn't really anything for investors to be looking forward to. What would you say could be that next catalyst, and what are the chances it is progress on the strategic Bitcoin reserve?
I think that zooming out, Bitcoin is a phenomenal use case as digital gold. I think the real catalysts that we're going to get in the crypto space are for blockchain technology overall. And I think those are all going to happen this year. We're going to see a stablecoin bill. Stablecoins are the first of many product market fits for the crypto ecosystem. Tokenization is really the end game. I think that the genie's out of the bottle. I think tokenization is inevitable, and that is going to be universal across the globe, across all institutions. I think we're going to see a market structure bill that gives a clear sandbox for innovation for this new wave of tokenized assets. All of that is accelerating right now. That to me is far bigger than just Bitcoin. That's a real technological change. That's rewriting the future of finance and the future of the digital economy. And we've had past administrations that have opposed that for 10 years. And now the US is being slated to be the home for crypto innovation. So I think all the catalysts are imminent. And building upon that, every single bank we talk to, every single institution we talk to is developing a crypto strategy. And that crypto strategy both includes Bitcoin's digital gold and building on Ethereum for tokenization, for their tokenization engine. And that's an unbelievable secular opportunity. So I do think there's actually a lot of catalysts coming. It's just having all of them move instantaneously is not realistic at the governmental level and institutional level. I don't even think it's the next decade thing. I think it's over the next year or so, a lot of this will come into fruition.
Going back to what you were previously saying about institutional adoption of Bitcoin and particularly ETH, ETFs, ETH has faced a lot of pain this year, down roughly 30%. Working at Etherealize, what do you think is the narrative driving that, particularly among institutions? You were just talking about that long-term adoption. So what should investors make of the suffering that ETH investors have endured so far in 2025?
Definitely. So Bitcoin has paved the way as digital gold, and I see Bitcoin as getting to the same parity market cap as gold in the long run. That is the most important first use case, but to me, it's not the end game use case for the overall blockchain technology. The blockchain technology part is a lot more complicated. It takes a lot more time. It takes a lot of catalysts to come together at the same time, regulatory frameworks, institutional willingness to adopt, and technology being ready for prime time. All of that happened in the Ethereum ecosystem. So Ethereum disrupted itself, and that's part of the reason why we've seen some short-term price disruptions. Ethereum is scalable. It's the fees are low, and it's ready for institutional adoption. It's been around for 10 years. It's been battle tested. The most amount of tokenized assets are on Ethereum by far. The most amount of institutional adoption is on Ethereum so far. In fact, if we take away the price of ETH and just looked at all the adoption achievements that we've seen, you'd say that this is the beginning of a mega trend. So I think that, once again, the market's providing us opportunities. Bitcoin's an easier and cleaner narrative for the short term as digital gold. But if the real prize is tokenization, think the next domino to win this race is Ethereum.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.